You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. Everyone's favorite, I know it's my favorite at least, bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. Baker's dozen, you know the drill by now, worth of programs on said network. Where can you find it? Well, of course, the mothership, theoptionsinsider.com. Click on that Insider Radio Network tab in the top left. You'll get access to all of the thousands of hours of programming we have up there, including 400 plus for this here program, the Option Block alone. And of course, while you're there, click on some educational articles, some unusual activity articles, even some breaking news on the options market. All sorts of fun stuff up there for your reading and indeed listening pleasure. And of course, for the audio stuff, you can also find it iTunes, Stitcher, AHA Mobile, TuneIn. I forget to mention that one every now and then. We're up on TuneIn. Wherever you like to listen to your favorite programs, we're there. And if we're not there, let us know. We'll make sure we're available on that platform as well. Or, of course, just head on over to the iTunes Store or the Google Play Store and get our app. And then you can have it pretty much anywhere you go. So no shortage of ways for you guys to keep on top of the old Option Block program. And I'm joined today on the old program by the usual cast of characters, starting off with the man beaming in from Options Express by Charles Schwab. You know him, you love him as the Viceroy, a.k.a. the man of many hats, a.k.a. the man of many watches, Mr. Alex Jacobson from OX. Mr. Viceroy, welcome back to the program, sir.
And I never know how to answer the question, do you know what time it is? But good to be here, Mark. Another interesting day in the market. You take out the last 10 minutes yesterday, which was all about grease and oil. This market has been doing pretty well.
Of course, you'll know the answer to that question, what time is it, very shortly when you have early access to the much anticipated iWatch. So there you go. Access on this program has its privileges, sir.
It certainly does. That certainly pays off.
And as a man who loves Apple, but not enough to buy any of their actual products, you know him, you love him as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old program, sir.
Good to be here. And the answer to the question, do you know what time it is yes or no. It's not 4 o'clock or 3 o'clock or what time it is. The proper answer to that is yes or no. Listen to the question. That's my message for this introduction.
The grammar Nazi back on the old program. I'll have to mind my P's and Q's quite literally with you on the old program today. All right, let's move away from that really quickly, lest I offend him further, and move on over to a man who's not afraid of offending any grammar Nazis, and he does it on a regular basis. You know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi, from the pit, as well as some detours around the old Options Insider. Mr. Rock Lobster, welcome back to the old program, sir.
It is good to be here. Actually, just listening to Tucson, I'm a little afraid of the strategy block today. I wonder how deep he's going to get into the option nomenclature world.
Today's trap block's all going to be about I before E, except after C. That's going to be
calls. Puts before calls.
Yes, there we go. As it applies to put call parity, of course.
As it applies to put call parity.
Absolutely.
I'm looking forward to that now myself. Start thinking, Uncle Mike. You got about 30 odd minutes. All right, and with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. This is indeed, if the name didn't spell it out for you, this is the portion of the program where we break down what we're watching, what's catching our eye out there in the old markets, and as the Viceroy alluded to, another weird one. We thought we had our handle on what was going on today, then towards the end of the day, it exacerbated things yet again. Most of the major indices closing up about 1%. The S&P exactly 1%. The Dow up 1.1%. The Q's bit of a laggard, only 0.9% on the day. So not still a good day for the Q's, but not as close as the others. Always a bit of a laggard, seems, to the upside these days on the Q side. And of course, to the downside, good old VIX cash retreating from those low 20 handle highs now. Trading almost exactly, trading metaphorically, of course, trading right around 17, even off a dollar, or I should say 1.3 on the day. I always throw in that dollar thing every now and then, too, just to annoy Mr. Sebastian, of course. Since we're talking about Sebastian, we'll start with you, Mr. Rock Lobster. In addition to that $1.30 coming off the VIX cash, what caught your eye in today's activity?
That was the we'll just call it the ECB Greek cage match. VIX premium keeps getting shaved off every day. And the only thing I thought yesterday, when the ECB said, "Oh, nope, can't use those bonds because we don't know if you're actually going to be around to use those bonds. We're not going to accept them as collateral anymore. If there's no deal," which makes sense to me. And then they turned around, I think, and gave him a $60 billion credit line. So I'm confused. I guess the credit line's a lot easier to pull than taking bonds, Greek sovereign debt as collateral. So a lot of machinations going on over there. It's high drama always. And, basically that has been causing our market to oscillate anywhere between 2,000 and 2,600 or 2,060 on the SPX. And right now we're at the high end of the range. So I'm sure they'll throw some more sticks at each other and rocks. And tomorrow we'll be trading, 2025 by maybe Monday. Who knows? But it has very little to do with what's going on in, as far as, real economic stuff, real earnings stuff. And it's been mostly noise on Greece. So until that gets settled, we're going to keep seeing the swings. That's what I think. Now, I will say, though, that the kind of the sell-off in treasuries, sell-off in gold, for the most part, or the slight pullback, shouldn't say sell-off. It was actually up $1.60 today. It was down a few dollars the last time I looked, actually. We have a market that's just teetering on that, but the premium does keep coming out of it. VIX now, I guess, is closing below 17. So it's been a while since we've been in the 16 handle, about a week and a half or so. And that's all we got. It almost seems like everything else that happens in the economy doesn't matter. I mean, the oil rally has helped because mostly that just pulled those shares up. But, other than that, I still think it's short term. It's all Greece. And when it's done being Greece, we'll probably start seeing those levels that we saw at the end of 2014.
And Mr. Viceroy, what caught your eye in today's activity, sir?
So a couple things. One of the, I look at an arcane name, but I'm known for arcane names to kind of look at the oil economy. And that's one of the local Texas banks, which is Cullen Frost, which has been up about $8 in the last handful of trading days, which means that, business can't be that bad in Texas, or at least spending. I'm one of the folks in the camp that I think the good times in oil in terms of gas prices at $2 are going to be here briefly. I think oil's going back to the $60 or $70 area. But another name I talk about a lot that we did a lot of business in today and that had some extraordinary movement is my old buddy Amazon. And there's the calf market in the background. Amazon's up almost $100 off the recent low just before earnings, 280-ish in that area, and it's almost 380, and it's up $20 in the last couple of days. But, Amazon up 100 off the cycle here. One other thing I look at the social networking three, Facebook, LinkedIn, and Twitter. And of course, LinkedIn is reporting now, and I think Twitter has some news now. And both of them are up big in after hours. I think Twitter beat by quite a bit. And Alibaba, which has become a perennial favorite at OX. Alibaba continues to be weak, losing another 3.5 points today. To Andrew's point, I think what's been going on in treasuries and gold, you look at recent earnings and you say, well, you had disappointing earnings from CAT, you had disappointing earnings. Today, Cummins sold off a little bit on decent earnings. Microsoft and Procter & Gamble, do I attribute that to earnings? Yeah, it's earnings, but it's really the dollar. It's really the fact that the dollar has rallied, 17 or 18%. And so I think earnings aren't that bad. The economy isn't that bad. Yeah, the dollar is clearly a headwind. And, my turning around and saying, well, the earnings weren't really that bad because of the dollar. The earnings were bad because of the dollar. But I think it's explainable away. And I think business is pretty good. And I think this market is going to break out and move a lot higher.
It's an interesting day today. Certainly in retrospect, that Amazon pre-earnings straddle seems like the buy of the century. I forget if it was at $21 or $27, somewhere in that range, but certainly dramatically underpriced given a recent movement. Of course, that was a weekly straddle, so you probably wouldn't have gotten all of this love in it, but still, it was dramatically underpriced, however you looked at it. Of course, that being one of the few names that really seems to have dramatically outperformed its straddle going into earnings. Speaking of earnings, there are a few coming out after the bell today. Alex already mentioned Twitter. They went out right around 41.25, right near the 41.5 strike. That 41.5 straddle going out about just a hair shy of $5, so pretty close to it. So far in the after hours, seems like they're up about $1 or so. So we'll see if they come to fruition or if Twitter, perhaps they're pricing in some of that Amazon love and perhaps being a little bit overzealous at doing that. Another name we have reporting after the bell today, one of Andrew's old favorites, one of my old favorites actually from back in the day. I haven't been too active in it in recent years, but this was Activision. It was always a very reliable premium right going into a lot of their earnings. The last year or so, not so much. It's actually been moving quite a bit. Closing today, $21.82, just about 20 cents or so off of the 22 handle. That 22 straddle going out at about $1.60 or so. And we'll see if they have their earnings coming out in the after hours as well. Looks like they're out and they're actually taking it on the chin, off about $1.60 or so in the after hours. So there you go. That one looks fairly priced in terms of earnings straddles. Closing, like I said, 21.82, trading right around 20.25 or so right now. So we'll pay attention to both of those as the show continues. Meanwhile, Uncle Mike, let us turn our attention to you. What caught your eye today in the land of Apple and indeed that shiny stuff?
Well, a couple things, actually. But before we get into that, if you haven't read the book before, Remnants of a Stock Operator, I would highly recommend it. It's a book kind of outlining Jesse Livermore's life as a trader. It really isn't anything technical on options or anything like that, but it's without a doubt, if you haven't read it, then you're really not a real trader, quite honestly. I think it's that good of a book. But anyway, in that book, he talks about how he wanted to get back into trading. This is after, I forget, his second or his third bankruptcy, something along those lines. And he only had a certain amount of money, so he had to stay very disciplined about when he was going to get back into a trade. And one of his rules was that as soon as a stock hits 100, a lot of times it continues to go up further. And he just goes into great detail about how he watched this stock. It goes up, it goes up. He really felt that at 90 it would be a great buy, but he had to keep his discipline. He felt at 95 it would still be a great buy, but he had to keep his discipline because he knew he only had one shot. And so finally the stock hit 100, and the stock, sure enough, it rallied. And then he was back basically in the trading game. Right now, I'm at a point to where there's never been a pullback I didn't love. I'm the most pathetic bull in the world. I will give full credit to that, or I will admit that fully. And then so far, these last couple weeks, what has been going on is that because of the fact that the market's been negative on the year, I've just been doing some out-of-the-money put spreads. We've been making some money. We're ahead on the year. We're actually still doing well. We're actually at a slightly higher pace than we were last year when we had the short calls in place. And that's on my call strategy. Still been selling a couple covered calls as well on the long SPY strategy. But moral to the story is that we are positive on the year now. And if we can make it through the unemployment report tomorrow and we are positive by day's end, I'm going to start buying calls again. So I'm actually very excited about getting to do what I love best, if indeed we can hold through the unemployment numbers tomorrow, or non-farm, whatever way you want to look at it. In terms of Apple and the shiny stuff, I did end up rolling up my 120 call, or my 119 call on Apple. So I'm up at the 121 level for this week. So if that expires worthless, just the money that I had to pay for the roll, I might make a couple pennies. It'll be end up being about a break-even trade, assuming Apple doesn't go above 121 tomorrow. So with that, it was one to where I took a small amount of money and risked it, and we might end up being okay. Should I make it through tomorrow towards the end of the day, I'll do it again next week. I still think that right now, Apple's, it's going to, if it does continue to go higher, I'm happy with that because the vast majority of my holdings in Apple are uncapped. And if I end up having to roll this 10% of the holdings in the covered call that I have, then quite honestly, it's a good problem to have. But if we go down, then we make a couple bucks on the covered call, or we stay the same. In regard to gold, it's relatively flat. It was relatively flat today. Probably tomorrow after the unemployment report, non-farm, if we get a little bit of a pullback in gold, I'll be looking to possibly sell a put spread on it just to kind of see where it goes. But for now, just long stock, or I should say long underlying, long put, just kind of watching to see where this goes after tomorrow. And that is what I'm seeing.
Just to hit on a few other topics, you may have seen the news, listeners, kind of a bit of a bombshell coming out of our friends over there at the CME. A lot of us have backgrounds in this show in the open outcry market making world, and the CME coming out today saying, yeah, no more of that, at least on the futures side. They're keeping the pits open for the futures options due to some of the complex nature of the trades that have to go up and be facilitated there on the floor. But in terms of open outcry futures, bam, done. And not really much of a honeymoon either. They pretty much came out today or yesterday and said, yeah, that's it, and you have to be out by July. So not a lot of wiggle room for a lot of the firms. Granted, anyone with a half a brain should have seen the writing on the wall a long time ago. I saw a joke just the other day when the news came out that, hey, this is not surprised this is happening, just surprised it didn't happen 15 years ago. So a lot of people are weighing in on that side of the fence, but a lot of people on the floor are also pretty angry. I was talking to some firms today who are, shall we say, not enthused with the CME's decision to give them very, very little runtime to actually get their operations shut down. Andrew, I was never on the CME. I was on the CBOE guy. I know you were a CBOE guy and P-Coast. Did you ever dally with the CME in your time as a local?
No, we had a small presence over in the Dow product, many years ago when they first listed the Dow futures. But I never, except for just after I stopped trading, go over there to do some news broadcasts or something. I just never went over. It was funny. For a while, I thought about trading euro-dollar options, but just didn't happen. And so anyway, I began the future side. That looks like that probably used to be a living for some people, and now it's not. A lot like floor trading options really isn't much of one anymore. It's all electronic. Even when you're on the floor, it's kind of all streaming. But there are some diehards out there that still participate in some spreads and things like that. So I do know some people out there that are still making a pretty decent living on the floor. It's not the same type of trade that it used to be, but it's something. So not many of them, though. You have to be kind of a wily old devil to do it. But
the interesting thing will be to see if costs go down. Because one of the issues of keeping a floor open is it costs money. So it'll be interesting to see if this is, A, the fact that they don't need the floor because of electronics, something we may have proved at the ISE, but to Andrew's point, it doesn't work for every product. Some products still need the price discovery of a floor. But the thing is, I bet costs don't go down, which is really a shame because then it doesn't do the customer a service. There was other news today in the options industry. Two of the smaller market-making firms called it quits today, and yesterday Credit Suisse left equity market making. The good news about all this is it creates terrific opportunity for the small people, for the smaller firms. And when I say small people, I mean market makers that have 15 or 20 folks sitting on 7 or 8 screens, because they're the ones who seem to be picking up the slack in all this.
That's interesting. I would think that like the bigger firms have the money to stream, but I know that streaming business has become very, very tough, and there's only a few people that really can stream on a regular basis and really participate.
Yeah, and some of it is regulatory issues too. Some of it is it's just, it's hard to compete with Citadel and Timber and Susquehanna unless you do an honest scale. And for some of them, they just don't want to scale up.
Yeah, because I think the risk reward, if it was, it was 1999, yeah, but it's not 1999 as far as how the paper really flows anymore. So it's a different, it takes a lot of expertise to run an options business like that now because there's so small margin for error and it's becomes such a technical battle. Who's going to wage it?
The other thing is a lot of people exist at the margins. A lot of people exist because of some, there was dividend capture and there was block trading. And there's an assumption in this industry, at least by the folks I talk to and some of whom are regulators I've trained, that will make or take or go away? Will fee caps adjust? The industry has evolved. There are now, I think, 13 options exchanges or 14 options exchanges. And one thing you saw is big share change in the last couple of months at places like BATS and MIAX, the Miami Exchange. And you say to yourself, well, what do they really excel at? And the thing is, they have a specific niche. CBOE's the biggest exchange, but CBOE's business model is clearly S&P and VIX, and they've commoditized the equity and the ETF options business. ISE has lost almost 2/3 of its share to some of the smaller players. So it's interesting to watch this evolution. And the question is, when it settles all out, will it have benefited our listener, our customer? And the answer is right now it's evolving. And the CME announcement is an evolution. It should benefit the customer, but I'm not sure it will. And some of the smaller players leaving in market making, again, competition is what made this thing great. I mean, this business in 2000, was dominated by 2 exchanges and did 3 million contracts a day and charged lots of fees. And today it's 15, 18 million a day, and there's rebates, which we can argue if they're a good idea or not. I'm not a big fan of maker taker, but the business has evolved and it's going through another evolution here. And to see, Credit Suisse drop out, Merrill Lynch drop out, and JP Morgan drop out, it's not for lack of money, it's for lack of margin.
I was talking with some people today, and they were going to go to a meeting with some with some market makers potentially about a new product that the CME might list. And after this news came out, they said today, yeah, you know what, we're not going to that meeting because we're not going to do anything that's going to help the effing CME, I believe was their exact response. So a lot of love flowing off in the wake of that decision, as you might expect. Not exactly a surprising one, although the timing of it may be. Took a few people by surprise. Before we wrap up the old trading block, a couple other things here. We mentioned Twitter. I neglected to throw in LinkedIn, the other side of that web 2.0 / social networking / business site that everyone's on, the category LinkedIn. The closing today, just a hair shy of 238. That at-the-money straddle coming out right around $20 or so. And in the after hours, it's like they're up hard, but perhaps not as hard as the options folks would like to see. They're up about $14 here in the after hours to about 251. They were up a little bit higher, about 15, when I checked them a few minutes ago. So it seems like they're already coming off the height of that deal. Of course, this could be like a Google. We saw Google sell off initially and then rally hard after the news. So maybe we'll see LinkedIn catch a second wind as the show continues. But of course, it is time for the show to continue. Time for us to keep on rolling right on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again to dive into the seedy side of the options business. It's time to break down the unusual activity as it's time for the Odd Block. And the first victim / star of the old Odd Block today is a newcomer, I believe, to the old segment. This is Youku Tudou Inc., ticker symbol YOKU. This is an ADR, in case you couldn't guess from that name. Closing right around 18 even on the day. This is the name that does a decent amount of volume for its relatively obscure nature. It does about 4,600 contracts a day. Today, lighting it up to the tune of 16,000 contracts. So serious paper here. And I have to scroll all the way out to the March expiration month to really get a handle on what was going up out here, listeners. And in a nutshell, it was everything March calls was going up today in YOKU. In particular, what first caught our eye was a block of 5,000 of the March 23s going up for a clean dime. That's pretty much all that went up on that strike. But then we saw later on in the session, we saw 3,000 of the March 24s going up and 4,000 of the March 25s going up. All of that on negligible open interest, a couple hundred contracts or less on all of those strikes. We also saw some meteor contracts going up, the March 18s, those are the at-the-money strike, going up 2,700 times. That one on a little bit more open interest, about 6,000 or so contracts to it. This is an interesting one here for a lot of reasons. First off, he's gobbling up strikes that are all offered at a dime or a nickel, so you don't see a lot of that. This is some serious love. This thing's got to rally 5 handles by March for this thing to even be remotely considered. Again, paper was buying for the most part on these dime names. They went up marked as buy right, so there was some stock going up with it, about 20,000 or so shares. That went up with the first kind, I believe, the March 23 kind. The rest, I don't think, had stock with it. So it's a bit of an interesting one. Someone perhaps coming out here and hedging his bets with some stock, but indeed just taking down all of the upside he can here in YOKU. I think he only missed like 2 or 3 strikes. So, Mr. Rock Lobster, what's your take on our friend here just saying, if there's upside, yeah, I want it in YOKU?
I know. You do remember we also profiled not long ago somebody selling very near-term premium, like synthetic straddles in YOKU? I think this was the one.
Was this the one? You know, the name did sound kind of familiar, but I couldn't remember the exact activity we had talked about.
But that was the 16 handle.
Oh, maybe that's our friend.
Yeah,
there's 20,000 open on the 16 handle, so maybe he's legging into a very short spread by stupid, I suppose.
I kind of nutty, huh? It really. He did it sort of delta neutral, say, sort of 20,000 versus what, 5,000 calls. So that's about a 5 delta. I don't know what the heck. It sounds like they want to short the stock, but they want to own some calls just in case. But it's a huge move. And I was just been poking around with Twitter. I actually learned how to use Twitter to search for stocks today. I know, like 4 years too late, but I'm looking at Youku, possible SEC, something coming out, who knows? But that kind of trade, somebody is looking for just a big move, like nothing close to near the money. It's either, obviously they're thinking up or just getting smacked dead. And that's that type of trade. If you're buy writing that, you're just buying really those upside calls for margin treatment. So that's how I see that particular trade. But it's funky. That's an odd.
This is an odd one. And listeners, I just did this. You can do this as well if you want to do your homework on the names we talk about here. Just go to theoptionsinsider.com, type in that ticker. You can see what we said about this name last. And we last talked about this one back in September. September 13th, when we saw some size upside call activity. About 14,000 calls and about 1,700 puts went up that day, about 2.5 times the ADV in this name. And what we saw at the time back then, this was September, so the DEES 25s were the most active with about 3,000 going up at the time. We also saw buyers on the OCK 24, SEP 24, and SEP 25 strike. So that would be in keeping with what we're seeing here. I'm looking at the underlying here, and back in the September timeframe, let's see if I can pull up a little bit farther here on my chart. There we go. The September time frame, the underlying was actually not that. It's about 18. So it's about exactly almost where it is today. So that's a very similar trade back in September to what we see going up. Someone clearly gobbling up some upside. I think you're right, Andrew. I think it is against those short 16s. He sold those and said, maybe $2 in my face isn't the best thing. maybe I should put up some upside calls just in case the worst does indeed come to pass. And he got all of them.
I guess it's just that's one where somebody knows something or they're afraid of something. That's that trade.
All right, moving on to our next victim. Uncle Mike, put your listening ears on because I think you might have heard of this one. It's called AAPL, something like that. I'm not sure how to pronounce that. I think it's Belgian. I think it's Belgian. So we'll keep an eye on that one. We'll get confirmation on the pronunciation as we move on into this name. I won't bother to bore you listeners with the ADV or anything else on this name. Let's just say it's averaging over 1 million contracts a day and leave it at that. This is indeed the mothership when it comes to options activity. And what we saw catching our eye again today was once again out in that very, very popular March time frame. Let me just scroll my screen accordingly. Here we go. Not in the March weeklies, but in the March proper. And in this one was the March 75 puts. So if you listened to Uncle Mike earlier, he said it closed right around 120. Yes, these are the March 75 puts. So a whopping 45 handles out of the money. It went up in one block 13,400 times. Paper selling for 4 cents. I'm sorry, that's just hilarious. Selling 13,000 of them for 4 cents. So the total of 18,000 having gone up on the day. This is wow. This is odd. First off, Uncle Mike, before we even get to the rock lobster, Uncle Mike, is there any scenario where you can envision yourself coming in and blasting out the March 75s for 4 cents?
Well, let's see. I had my limit order out there today for 5 cents, but I guess I didn't get filled on that. So,
no, I front run you on that one.
Oh crap! I knew it was that rock lobster front running again. So, no, I can't say that I would. Granted, I'd love to buy Apple at 75, but in terms of the risk reward on that one, people who do things like that typically, I think just to quote a wise man, Mr. Longo, just because it's the big money doesn't necessarily mean it's the smart money, and I'll leave it at that.
Yeah, I think that certainly qualifies in this one, 4 cents. That's crazy.
All right. I can think of on this just today is you're going to either buy German sovereign debt for 2 months. Let's say you're buying 2-month commercial paper there or something, or 2 month sovereign debt, and you actually have to pay them to borrow the money for 2 months. Maybe they found something that was equivalent, that was safe, but that would give you almost a negative return for your risk.
Yeah, this is the quality one.
I thought this was one too for Alex, for him. Just maybe the Viceroy has a potential reason why anybody would want to get 4 cents back on can only be very large margin for those puts. It's like you got money just to burn. That's like taking your money and lighting it up with a lighter and throwing it. That's how I see that.
Well, we'll see who's laughing come March when Apple's above 75 and that guy gets his 4 pennies, by gosh.
You're right. I'm sorry. Actually, we got to add that up. How much money are they going to make for sure? That's after commissions, just where they got 13,400. Oh, wow. This is going to be some dough. 3,400 times 53,000 bucks.
Now, what's the risk on that? Multiply that by the 7,500.
A lot.
No, they're teeny puts, Mike. There's no risk there. I think you're missing the point entirely.
He sold 13. Actually, he sold them for less than a teeny because it's 4 cents.
Yeah, of course. I'm saying they would file under the teeny back in the day.
Right, so, but they're junk.
I'm guessing one of two things. It's the Apple ESOP, or it's some layer of a flex trade. But if it's the ESOP, they just may have liability. I mean, they just may have to buy stock at that level.
Oh, okay. So there had to be.
But I'm guessing.
But that's a great guess. That was much better than the guesses I had, which were none.
So think back prior to 2000. If you sold those, if a corporate treasury sold those and they expired worthless, it was a tax-free trade. It was a balance sheet trade. And today it's kind of gray and funny as to the tax treatment because the IRS had a no action letter, and I believe that no action letter has lapsed. But it's either nonsense, it's an ESOP, or there's some kind of flex trade somewhere that we're not seeing reflected.
I like leaning towards the nonsense myself. It just makes it
makes
much
it more fun.
Yeah.
But like to add to what Alex said, let's say that someone needed to, if someone is short a much closer position, maybe someone's short the 110 puts, and maybe they need to free up some margin to do something, and maybe that's what they did to do it. Maybe.
Yeah, it's a scratcher for my head.
Yeah, I'm sure he'd be happy to pick up the stock at 74.96, but still, it's just an interesting one. However you slice it, definitely worthy of some odd block attention. Before we roll on, let's hit our final one here. Again, going back to the put side of the fence, again in the petroleum side of the fence, the puts and petroleum have been going hand in hand of late, listeners. We're going to finish things up here with Oasis Petroleum Inc., ticker symbol OAS, closing today $18.40, up about $1.20, or about nearly 7% on the day. So not a bad day here for good old OAS. And this is a name that does about 4,500 contracts a day. Doing some decent paper today, doing about 17,000 contracts today. So fairly aggressive paper. What caught our eye was going out beyond the March to the May expiration cycle today. In particular, we picked up on a block of 4,000 of the May 11 puts, going up for 42 cents this morning. Paper buy-in, again, went up in one big chunk with some stock. I don't have the exact amount of stock here, but stock went up as well. And a total on the day of nearly 6,000, 5,904 on open interest of about 25,000 contracts. Looks like on the open interest, looks like maybe a 10-11 put spread went up, and now they're perhaps closing out that short leg of it here, or taking off some of it off the table against this. Mr. Rock Lobster, what's your take here on this OAS? This puts going up here in OAS.
Okay, so quick guess. Where do you think where the stock was last week before this huge oil rally? 1 week ago today.
1 week ago today, probably, I'm going to guess mid-teens.
$12.
Quality.
Yeah, so that's not a bad guess. So the thing had a giant rally. So if you bought puts in stock and you just got a 50% jump in your price of your stock,
You're not too upset.
I would think you would have to take that money. So, because there's still value left in the puts. The volatility is still pretty high. And they watched, all of a sudden, they're like, wow, I'm really long. I better take this. And I think it's a close. But that just shows you buy a long-term put in stock position, much like Mr. Tusa does every once in a while. And you get the lift in your underlying. It gives you the opportunity. You should do stuff, as in close, roll, do something. But I think this customer did that, scooping the bottom when oil was just in the ash can at around $42 a barrel. So I think there's a lot of opportunity in that space still. Probably, it could easily see oil go back down again, but I think somebody just took their monies and said, thank you very much.
Actually, let me rephrase that. I think I said that backwards. I think I said they bought puts. They actually bought puts obviously earlier with stock, and now they're getting out of that trade. So they're selling the puts and they're selling the stock. So if you're scratching your head saying, why would this be a good trade at the top of this chart? That's why, because they did it the other way, actually. So that's keep that in mind as you're looking here at good old Oasis Petroleum. And now it's time for us to get on out of the petroleum/Apple/odd block and keep on rolling right on into the Express block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, you know the drill. It's time for the Express Block, the portion of the show where the Viceroy dons his fanciest of fancy caps, because it is, of course, a very formal place over there, and takes us behind the scenes into the land known as Options Express by Charles Schwab. Mr. Viceroy, which way is our tour headed today?
So we're going to talk both Schwab and Options Express today, and I have the Bloomberg Business News on in front of me, and they just ran the current Options Express ad, so I'm going to kind of recap what's being showcased in the ad. And if you're watching CNBC or Bloomberg or Fox News, you're seeing our new ad, and it's basically showcasing three of the outstanding tools available on the OX platform. The Idea Hub, the Trade and Probability Calculator, and the All-in-One Trade Ticket. And as long as I'm on the topic of the All-in-One Trade Ticket, let's move to the Schwab side for a moment. And I want to remind everyone that Schwab and Options Express are affiliated companies. Street Smart Edge, the Schwab platform, now has the all-in-one trade ticket. It has the four-legged trade ticket in it. That's a recent enhancement, and that's one of the Options Express tools that has ported over to Schwab. Obviously, the intent when Schwab bought Options Express was to take some of those terrific tools and port them over to the Schwab platform, and that is beginning to happen. A light version of Idea Hub is available on Schwab Mobile, and the four-leg trade ticket is available on Street Smart Edge. Over the coming months, many more of the robust OX tools, and to those of you who traded OX, you know how cool these tools are, will be moving over to the different Schwab platforms. One other reminder, and I've been remiss in not talking about this more, but new account coming into Options Express, $150 Amazon gift card. If you come to the site, optionsexpress.com, navigate down the page, you'll see the offering for the Amazon gift card. There are some terms and conditions that apply, so please read the fine print. But those $150 Amazon gift cards are, I don't want to say they're gathering dust in Grigas's desk, but let's get them out of Grigas's desk and into the customer's hands.
And feel free to send me a few of those as well, Alex. If you're just gathering dust, I'll hold on to them for you and make sure they're given a good home. How's that sound?
I'll mention that to John while I'm trying to pry his drawer open.
All right, that's going to do it for the Express block. And now, because it's Thursday, we're going to keep on rolling right out into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys get to take the reins, make your questions and comments known to us as well as to your fellow listeners. And we got one coming in today. This one comes from a frequent questioner. This is Mark Brant. He wrote this in a while ago about some unusual activity we were talking about on the site and on the show, I believe, close to a month ago or so, maybe a few weeks ago. This was in the AGNC, Mr. Andrew. He writes, he quotes our article, says, all these AGNC March 22 calls went up in one giant block, marked buy right with about 360,000 shares marked derivative. He wanted to know, where did it go up and where was it, quote, marked? Where are we seeing these trades? Thanks. So I thought Andrew might be informative. We've done this before. It might be a good time to revisit it again. Kind of walk people through, how we find these. And we mentioned before the different software we use, of course, the Acumen, the LiveVol, the Trailer, a few others. But let's walk people through our process, and then we can tell him, in particular, where we're seeing these things printed on the different exchanges and how we find these tags like this. So what do you have to say here for our friend, Mr. Brandt, who wants to know, where exactly are we seeing these things?
If I have to give away all my secrets, then it's not a secret anymore.
Let's just do the magician's version of it.
Okay. Where do we see these? Well, one is I use like a platform like LiveVol, which does show a trade tag. I know that there are other platforms, not sure about OX, but other platforms that shall remain nameless, where they actually do show the trade tag on the right in time and sales when it prints. A second thing is usually, and I think, and Alex probably knows the exact exchange rule, but when I was a market maker, when you put up a buy right or a stock, an option and stock print, that stock print has to go up relatively in a timely fashion because the stock has to print in sequence. That way, if you put options up, right, you're going to put an option trade up, that will be usually within the current market at the time it's executed, right? Because the broker quotes it, then it's executed. And they're saying, okay, I'm going to trade 20,000 contracts. I need to put up 200,000 shares of stock, or 20,000 contracts would be 2 million shares if it's 1-to-1. That is going to be tagged derivative, as in, because the reason why they tag it is if someone has a resting order in the name, and this one AGNC, and they see stock go up at a price and they don't get a fill, then the broker dealers get lots of angry calls from customers saying, why am I not filled? 20,000 goes up there and I did nothing, or 2 million shares go up and I did nothing. So they tag the trades to let basically for due diligence reasons. So everybody knows where things are going up, and that stock print would not go up without the option print. So on the platforms I use, I have that exchange data available that flows through. And when I see that, that's what I look at. Now, sometimes buy rights are going up, but they're not necessarily, you're not seeing all the volume, or it's only partial volume. And, usually if it's in within a minute, which is where 90% to 95% of them go up, that option and stock trade are tied together. So that's where we get that.
Well said, sir. Of course, as we said many times, it's difficult to rely exclusively on those tags because they are subject to a lot of myriad errors. Putting them up the right time, they'll often put them up late sometimes, and the trade will be out of sequence, and then the stock price doesn't make sense, and then the customer's angry, and the people looking at the stuff are angry. So they're a let's say a dubious science at best, those tags, but they can be informative. And we said before on the show kind of the different platforms that we use to find all of this stuff. It is a myriad of platforms, so not just one. So there's no one software we can say, hey, subscribe to this and you're good to go. You really need to have a bunch of different suites really running at the same time to do different pieces of the analysis. One could do the scanner to flag the activity. Then you need another one to actually see, hey, what the hell actually went up here? And then you need another maybe to check some of the historical open interest and time and sales. Another maybe to see exactly what exchanges they went up on and things like that. So there's a lot of different moving pieces to this analysis, which is why it takes a while, which is why we devote some time to it here on this program. And unfortunately, that's all the time we have for the mail block today. And now let's keep on rolling right on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the program where we tell you what's coming up on the old show. One more time, block. All right, welcome to the Around the Block portion. This is a portion of the show where we tell you, hey, what we're keeping an eye on for the rest of this week into the weekend. Mr. Rock Lobster, what's on your radar for the old weekend?
Well, we have the non-farm payroll number, which after the ADP number probably won't be anything great, but I want to see that. And if we can see VIX maybe touch the 15 handle tomorrow, we're starting to put the European thing behind us and actually going to look forward to all the lovely things that are happening in our equity markets as opposed to worrying about all the stuff that's going on in the world. So that is probably the number one thing on my radar. See if we can't get the vol to come down, but realistically, the market's been moving a lot. Let's just say on what is actually happening, not much. It's just orbiting around 2000, 2060, 2000, 2060. So not a lot of real action, and we could use some breaking out here to some new highs for this year.
All right, and Mr. Viceroy, what are you keeping an eye on for the rest of this week into the old weekend, sir?
Geopolitical events. I think Ukraine is going to be a bigger event than Greece. I think Greece is gone. I think they'll negotiate this. They'll kick the can down the road. But I think they need to work Putin on the Ukraine. I know Hollande and Merkel are over there now. When I say I know that's not any secret. But I'm more worried that the Ukraine blows up into something which ironically may help oil prices, which is the other thing I'm looking at, and always the macro issue of interest rates. Our 10-year trading about 180, everybody else's 10-year trading nothing. Japanese and the Germans, negative short rates, and the 10s are in the 0.3 area. I also agree with Andrew. I think a breakout over 2070, 2080 takes us a lot higher. But the geopolitical risk, I think a breakout over 2070 or 2080 takes us to 2200. I, like Uncle Mike, am a real bull given the interest rates. And it's hard not to watch VIX. And again, to Andrew's point, breakdown under 15. I think the next stop is 12. I know I'm one of the few folks who believes that, but VIX in the 12, no geopolitical worries. S&P goes to 2200.
And Uncle Mike, take us home, sir. What are you watching for the rest of this week into the old weekend?
Everything that Alex and Andrew just said. But once again, I want to reemphasize that I'm waiting for a little bit more of a breakout in the S&P before I jump on the train. It's very likely I'll be buying my ticket tomorrow. We'll see. I'm excited. It's very much a train I want to get back on, but I got to pertain to the rules of risk management first. That comes before anything. Definitely at about an hour before the market opens tomorrow, I'll be tuned in on my mobile apps, watching what the non-farm is, just to see where we're going to go with that. And I think next week could be a very exciting week with there's a lot of things that could come together, and I'm very excited.
And just to finish up here on the old Around the Block segment, checking back in with our friends here. hovering right around up about 370 or so on the day. That straddle went up around $5. So we'll see if it gets any more legs, or if it's pretty much stalled out right around that 370 level. Activision off about $1.60 or so, still in the after hours, so no turnaround there for them. Good old LinkedIn up about 15.5 in the after hours, so it's got a little bit of a bounce back to it. Again, that straddle going out about $20, so we'll see if there's more life to it tomorrow on the open. And I neglected to mention at the top of the show, so we'll mention it here, and it is suitable for around the block. If you're a CBOE guy trading options on the CBOE, they have earnings actually before the open tomorrow, so hopefully you have already done what you needed to do out there. Closed right around 65 today. That 65 straddle going out right around $1.50 or so. So we'll see how CBOE comes in, all this VIX volume, everything else, perhaps being a good bellwether for them going forward, or perhaps not. Other products like VXST perhaps struggling a little bit. So we'll see how all that shakes out as we go into the earnings tomorrow. And that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old ASP, see what they have cooking that may interest you. We'll start off with you, Mr. Rock Lobster. What's cooking in the land of the pit, in addition to all those tasty Maine lobsters?
Either I or Mark will be using volatility to trade direction, helping you to select the types of trades that give you a better shot at making money. That will be this weekend for all of you listening Friday. Surf on over to optionpit.com/events, and you can take a look at what has always been a very popular webinar for us.
All right, thank you for that, Mr. Rock Lobster. And Mr. Viceroy, what is coming down the pike in the land of OX live events and edumacation?
Next live event, Saturday, February 21st, Jimmy Roseanne and the crew in Las Vegas. What happens in Vegas stays in Vegas. I have some great Vegas stories for my first CBOE trip to Vegas. Webinars, Tuesday, February 10th, I'll be doing the conventional idea hub. And what I mean by conventional, it's on the security side, because there's also a futures side of hub. I'll be doing that Tuesday after the close. Wednesday the 11th, trading futures with Mike Zaremski for new customers or people who want a refresher. Also Tuesday the 11th, Nina's going to do order entry and walk limit. If you're not familiar with walk limit, possibly the coolest product on the street. The phones are ringing off the hook. February 11th, Nina's going to do long puts as part of the ongoing continuum she does. Nina's the other person in the OX education team, and she does this kind of ongoing continuum of education. So I know sometimes when I say she's doing long puts, that means the week before she probably did long calls. So she does it as a continuum. Thursday, the 12th, she's going to do collars and IRA accounts. And then midday, I'm going to do an idea hub for futures options. So all the events are free, even the in-person event. All the webinars are free. Navigate over to optionsexpress.com. And if you're a new customer, navigate down to the lower right-hand corner of the page and see if you qualify for the Amazon gift card.
All right, and last but certainly not least, Uncle Mike, what's cooking in the land of RCM?
Oh, all sorts of things. We have events coming up in the spring for Minneapolis, Chicago, Boston, Houston, Florida. Well, actually, Florida one's not till next December, but I digress. Anyway, for Minneapolis on March 11th and 12th, make sure that you register for that if you are in the Minnesota area. And if you're not able to get there, that is fine. Go to rcmfutures.com to learn a little bit more about what that event is and how you can get more information on it. Also, as per usual, I just want to mention, if you are looking to invest a couple $100 a month, something along those lines, feel free to give me a call. Would be more than happy to work with you in any way, shape, or form. My number is 312-212-3531. The email is mtusa@rcmam.com.
All right, listeners, take them up on it. It's a pretty good offer, and those don't come around every day, so jump on it. I know a lot of you have already, but if you haven't done so, he's got a few minutes left in his schedule throughout the day. Let's see if we can just fill his day morning to evening, and then he'll be very, very grateful and probably very tired as well. So check him out over there at RCM. And on behalf of Uncle Mike and the Viceroy and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.